Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Deepak Fertilizers and Petrochemicals Corporation Limited, hosted by Systematix Institutional Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pratik Tolia from Systematix Institutional Equities. Thank you, and over to you, sir.
Yeah, thanks a lot. Good afternoon, everyone. On behalf of Systematix Institutional Equities, I would like to welcome all the participants to this call of Deepak Fertilizers and Petrochemicals to discuss the third quarter and 9 months ending FY22 results. From the management team, today we are joined with Mr. Shailesh Mehta, Chairman and Managing Director, Mr. Amitabh Bhargava, President and Chief Financial Officer, Mr. Mahesh Giridhar, President, Crop Nutrition Business, Mr. Suparas Jain, Vice President, Corporate Finance, Mr. Devashish Kedia, General Manager, Corporate Finance, Mr. Deepak Balwani, Head Investor Relations. At the outset, we'd like to thank the management for giving us this opportunity to host this conference call. I would like to invite Mr. Mehta for his opening remarks, after which I would like Mr. Bhargava to take us through the financial performance, post which we'll open the call for Q&A. Thank you, and over to you, Mr. Mehta.
Thank you, Pradeep. A very good afternoon to all of you. I hope all of you are taking the OMI now variant in your stride, and hopefully all of us will have this behind us as we get completely immunized. I take the pleasure of welcoming you all for the Q3 FY22 earnings conference call of Deepak Fertilizers. I hope you have had a chance to look at the financial statements and earnings presentation that were uploaded on the exchanges and on our website. So I'm very happy to share that in the Q3, we delivered a 35% jump in the top line, a 62% improvement in the EBITDA, and a handsome doubling of our net profits. This Q3 performance was despite a tsunami like virtually every single of our raw material price hike. Ammonia jumped up by 115%, phosphoric acid by 78%, RGP by some 76%, potash, coal, you name it. Some areas besides the price hikes, we were also faced with availability bottlenecks. Now, despite the challenges, the good Q3 results indicate the following 5 fundamentals. Number 1 is, while some products did have some struggle, from an overall basis, our end customer industry has shown the resilience of our raw material pass-through and more. This is, indeed, somewhere we see as a good risk mitigation, I would say, available piece for us. It once again reaffirms the strong positive linkages. All the 3 sectors that we are in, meaning agriculture, specialty chemicals, and mining chemicals, all the 3 sectors have a beautiful alignment with the India growth story. This is the second aspect that gets reaffirmed through the Q3 results. The third aspect that we see is our strategy to move up the value chain into more specialty customer segment based products in all the 3 sectors is indeed in the right direction. Be it IPF for the pharma, crop tech fertilizers for crop specific segments in the fertilizer sector and the like. So this strategy to move from commodity to specialty also bearing its good fruits is once again reaffirmed. The fourth aspect that we see is our drive to bring technology and digital-based tools is also bearing strong fruits. As we connected with almost 70 million farmers digitally, or we drew in drones and technology-based products in our mining chemical sector, all of it bring a reaffirmation that that is also a right strategic drive. And lastly, as we see our new capexes of a global scale ammonia plant and a TAN plant are all going to deliver much greater and stronger fundamentals. So from this broad kind of an overview in terms of what the Q3 signifies, I now hand you over to Amitabh, our CFO, President Finance, who can take you through sector-wise financial details. Amitabh?
Thank you, Mr. Mehta. And good afternoon, ladies and gentlemen, and thank you for joining the Deepak Fertilizers and Petrochemicals conference call to discuss the Q3 FY22 results. Our financial performance during the quarter remained strong. During Q3 FY22, we reported a total operating revenue of rupees 1,956 crores, an increase of 35% compared to same period last year. Our operating EBITDA increased to rupees 352 crores compared to rupees 217 crores in Q3 FY21. Operating EBITDA margins grew to 18%, an increase of almost 300 basis points. Our net profit doubled to rupees 181 crores with a margin of about 9.2%. Finance cost reduced considerably by 15% YOY during Q3 FY22, driven by amortization of operating term loans, better working capital management, and reduction in interest rates. Depreciation increased YOY due to one-time accelerated depreciation taken in some equipment, anticipating reduced useful life of these assets. In quarter 3 FY22, revenue increased by 49% to rupees 1,182 crores in chemical segment, comprising mining chemicals and pharma and specialty chemicals. Segment profit increased from rupees 173 crores in Q3 FY21 to rupees 319 crores in Q3 FY22, an increase of 84% YOY. Chemical segment contributed about 93% of total segment profit. During the quarter, our manufacturing specialty chemicals business recorded a revenue of rupees 381 crores, an increase of 36% compared to quarter 3 FY21. Despite significant increase in ammonia prices, nitric acid demonstrated improvement in margins, supported by both volumes, that's about 6%, and the net sales price, which is about 56%, grew YOY. Shift of global supply chain trend towards India is resulting in improved demand from nitroaromatic segment, which are used which are used as intermediate in pharma and agro industry. Manufactured mining chemical business delivered an outstanding quarter with revenues of rupees 660 crores, an increase of 122% YOY during the quarter. The volume growth was about 43% YOY, and they were also better margins. So company continues to take advantage of flexibility in its product mix to maximize the margin. HDAN volume grew by 32% YOY basis. The low density, that is LDAN sales volume in domestic market improved by 9% on YOY basis. Our value-based business model in crop nutrition business resulted in quarter 3 FY22 revenues growth of 19.1% to rupees 769 crores. Fertilizer segment profitability were impacted due to unfavorable movement of key raw material prices. NP and PK recorded a sales of rupees 515 crores, and Bensulfur sales increased by 77% to rupees 32 crores in quarter 3 FY22. During the quarter, our TAN plants operated at 110% capacity utilization. Both acids and IPO operated at 86% and 88% respectively. In the crop nutrition segment, that is in NP and PK plants, they operated with utilization levels of 47%, and Bencell plant operated at 36% utilization level. So the available capacity across our plants provides us headroom for future growth potential. We remain confident in continuing our growth trajectory on the back of our business vision, which is strongly aligned with overall India's economic growth. With this, we would be happy to take your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Naresh Vaswani from Samiksha Capital. Please go ahead.
Yeah, my first question is on the raw material absolute cost which you have accounted in this quarter. So if I compare that with last quarter, there is hardly any increase of 17 to 20 crores. While you have mentioned and in addition and also in opening remarks that the material costs have gone up substantially, all the materials. And also the volume, if I club all the volumes, it is flat or slightly negative 1%. But even after that, the absolute cost should have gone up substantially given what you have mentioned. So what explains this? Because the end product prices have already increased, which is reflected in your realization in TAN and the nitric acid. So what explains this flat number for raw material cost?
Well, what you are referring to is quarter on quarter.
Yes.
I suppose. And while quarter on quarter, as you know, while the raw material prices continue to go up between Q2 and Q3, some of the increase that we were mentioning in terms of the percentage, whether it is ammonia, phosphoric acid, MOP, coal, and others, the jump or substantial jump was YOY, while quarter on quarter also there was a jump. But in quarter on quarter, what also happened is the volumes, particularly in the NP and PK segment, were lower, and that was primarily because of, as Mr. Mehta was also mentioning, that we also faced challenges of availability of raw material in this period. As a result, from a Concall standpoint, since the volumes in NP and PK segment reduced, it had an impact in terms of keeping the overall. If you're sort of looking at the overall cost of material consumed from that perspective, they were quarter on quarter. That number may not have gone up as it has gone up from YOY. So I think that's the reason. I'm not sure if there is more to the question that you asked, but it's the quarter on quarter and also certain volumes on the NP and PK segment which were on the lower side. Right.
So it's not that we had some old inventory which was low cost and which is why we benefited, and then in Q4 that would have some impact. So that is not the case. You are saying the increased material has already been accounted, except that the volumes have declined. That is okay, but the increase which was witnessed in this particular quarter, those prices have already been reflected. Is that right?
Yes.
Okay. And this increase in margins in TAN, I mean, the proportion of increase in realization is much larger. That is what explains the increase in margin in TAN, right? So what is happening structurally? Because the realizations in TAN have gone up almost like 70-80% if we compare it with like it was around 24-25 on a stabilized basis. Now it has almost reached 47%. So what explains this, and how much sustainable this trend is in coming quarters?
Well, one is fundamentally the volumes went up YOY. So almost, if you look at overall TAN, there was a increase in volume by almost 24%. Within that, HDAN was up 32% YOY, and even the melt was up 43%. So one effect was of the volume. The second, of course, is that while the raw material prices went up, we also saw increase in the finished good prices. Finished good prices, in fact, for us, are typically the price points in TAN, which we keep ourselves aligned to typically. One is the import prices of fertilizer grade ammonium nitrate. Also, the other domestic players who sell TAN in melt form, they also increase their prices. They have increased their prices as the ammonia prices went up. So a combination of the finished good prices, both internationally as well as domestic prices of TAN, they went up, and they our ability to, or rather, if you look at from overall margin perspective, despite increase in ammonia prices, the finished good prices saw even better improvement. Overall, I think the factor of demand growth in the quarter also reflected in the way Coal India's overall overburden production. It recorded a growth of almost 8% YOY, 43% quarter on quarter. Singareni Collieries, for example, their overburden production grew by 49% quarter on quarter and 26% YOY. So the effect of the domestic demand, our volume growth, and then prices, international prices of international as well as domestic prices from other TAN players, their increase resulted in these kind of margins. Now, to the point that on the sustainability, look, one other aspect that we've been working on, and as I think we mentioned in previous calls as well as somewhere in January early, we had also done a detailed sort of presentations to our investors, which was done by our TAN business head. The aspect that we are now also going downstream in terms of directly reaching our customers, or in fact the consumers in a sense who are the end consumers of these explosives, namely mining companies, mining contractors, infrastructure companies, infrastructure contractors. So we've also commenced a journey to move from product to solution, and therefore we hope to garner overall per ton of ammonia or per ton of TAN. We hope to garner better margins through our approach of not just product but product plus solution. And to that extent, while finished goods and raw material prices would go through their cycles, but our ability to get better margins progressively by going further downstream is what we believe is going to continue to have the effect of improved margins in TAN business.
Okay, sure. Thanks.
Thank you. The next question is from the line of Kumar Saumya from Ambit Capital. Please go ahead.
Hello, sir. Good afternoon. So my question is on the IPA side. Like we are cracking that way refinery grade propylene to IPA. So how is this process different from someone like Deepak Nitrite who is going through the whole phenol acetone route? If you could highlight some understanding on this process.
Well, the raw material used for production of IPA are different. In our case, our raw material is propylene, refinery grade propylene, while in case of Deepak Nitrite, it is acetone. So fundamentally, two different raw materials to produce the same IPA. That's really
yeah, sorry.
Yeah, so I'm not sure if there is anything more that you wanted to ask as such. Fundamentally, two different processes. Yeah.
Right, but how is the yield? Like if someone is using from acetone to IPA, their yield would be better, or from propylene to IPA, their yield would be better. And how, like, so for Deepak, the spread between acetone and IPA is guiding the margin, but for us, it would be propylene and IPA. So that understanding I was to understand, like, how is that this process delivering, if it is delivering better margin and better profitability?
See, fundamentally, IPA and propylene as well as acetone, all three products have their own cycle, price cycle, so to say. And that depends on the, while IPA can be made either from propylene or from acetone, but the prices of propylene and acetone would depend on their own demand supply equation. Acetone in turn goes into downstream products. So depending on the demand that comes from downstream sectors, the production of phenol and therefore production of acetone could have a different sort of demand supply situation in the market, and that could mean that acetone prices and IPA prices delta in certain periods could be high or low. I mean, again, like I said, both these are products that would have their own demand supply cycle and therefore pricing cycle. Likewise for propylene, refinery grade propylene also, the factors that decide propylene prices are one is of course the petrochemical cycle and the downstream usage of propylene, but propylene is also, from a refinery grade propylene perspective, it is used as a substitute, or the alternate to that propylene is to mix it with LPG, and therefore prices of LPG, propane and butane, could decide the prices of refinery grade propylene. So given that each one of products have their own demand supply cycle and therefore the pricing, the deltas between IPA and propylene and IPA and acetone could vary pretty much on a real-time basis, and therefore it is one cannot say that the margins from one is better than the other. It also depends on a particular period, and in certain period you may have better margins through propylene route. In other periods you may have better margins through acetone route.
That was very helpful. So on the steady state, so what is the margin that we get from our process, given the steady state, normal ballpark number, not particularly for this quarter, last quarter?
See, we don't report product margins separately, and to that extent, what you would see is, like for example, last year our IPA margins were significantly better. This year, more or less in 9 months that we've seen, IPA prices have remained subdued while the RGP prices have gone up. So therefore, margins are under pressure. What we are doing, though, again from moving away from this specific question, which is where the margins are not steady, and to that extent they could vary from quarter to quarter or year to year. What we are doing is progressively we are using our IPA in end user segments where the margins are better, namely for pharma, for pharmacopoeia or certain products which meet the pharmacopoeia requirement, and therefore there is a premium in the IPA that goes into certain segments of pharma. Likewise, we have our own sort of disinfectant product by the brand name of Cororid. So a part of the IPA is going into Cororid, and Cororid in turn is also being used we are finding markets where there are better margins available because the efficacy of the disinfectant made through our IPA or through the IPA route is getting better prices compared to the ethanol-based disinfectant, particularly given the application of these into hospital segments or the segments where the disinfection or efficacy is important. So from that perspective, our the idea of while we would always have competition with the imported IPA and even with the local IPA, the end user application of our IPA, given the certain characteristics of the IPA that gets produced from our plant, which is through propylene route, we are trying to find and we are working on various applications where the margins of IPA are better than the margins that we get in the commodity IPA.
So just last question. Do we plan to add capacities in the IPA because the import is still going very strong?
So in IPA, we are evaluating the option of acetone-based IPA, but there is nothing that right now has reached a stage where we have approved any capex.
Thank you, sir. That will be.
Thanks. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your questions to one per participant. If you have a follow-up question, you may rejoin the queue. The next question is from the line of Neeraj Palangi from Reliance Industries. Please go ahead.
Yeah. Hello. Congratulations on great set of numbers. I have only one question regarding TAN business. So basically, this is being used in explosives in the mines for coal extraction and all. It is majorly used for coal extraction only or for other minerals also, like nickel and cobalt or any other minerals. So where all exactly is being used apart from coal extraction?
So this is going for both coal and non-coal segments. In non-coal, practically all the minerals, all the metals, wherever there is a requirement of removal of overburden, TAN or TAN-based explosives are the cheapest form of chemical energy that can be used to remove the overburden. So it doesn't really differentiate in terms of what the mineral is, so long as there is an overburden removal requirement. The TAN would typically be used for blasting solution. Also, in the limestone mines, which essentially then goes into cement. Likewise, various stone quarries, which are actually there are practically thousands of stone quarries. It's a sector which is highly localized and disintegrated. So all the stone quarries, which essentially remove the stone chip for any construction activity, particularly the infrastructure segment, There also TAN is used as the explosive or basically TAN-based explosives are used for blasting solutions. So it's infrastructure, cement, steel, other minerals, coal. It's across all of these mining segments.
Okay. Just one follow-up question on this. So what percentage approximately would be used on a coal versus non-coal extraction kind of any ballpark idea or numbers on that?
Well, roughly, so it's very difficult because we also sell the TAN to the dealer segment, and in turn dealer segment would be catering to both coal and non-coal. So it's always difficult to trace every molecule of TAN to really assess where exactly it's going. But ballpark, I think 55 to 60% would go into coal, and rest in non-coal.
Oh, thank you so much. Thank you.
Thank you. The next question is from the line of Abhijit Akela from IIFL Securities. Go ahead.
Yeah, thank you so much for the opportunity. First of all, just wanted to get the current gross and net debt numbers, if you have them handy with you, and also what the cash from operations has been YTD.
So that's something, Deepak, if you have the numbers, what I am, the number that is there in my head is we have reduced the net debt by another roughly 240 odd crores compared to I think March 21. So there is that much of reduction. But gross debt and so Paras, if you have the gross debt and net debt numbers, if you can indicate. I think round about 2,200 crore of gross debt, and I think net debt now is more or less. I think exact number I wouldn't know because this is not the quarter where we draw the balance sheet, but like I said, we've reduced. Net debt is down by about 240 crore to March.
Yes, so net debt is about 1,500 crores.
Okay, thank you. That's helpful. And just one last.
So it was roughly at 1,826 crores, 18,000 in March, and it has come down to 1,571. But that's as Mr. Amitabh mentioned. This time we are not reporting balance sheet. That's not the audited numbers.
Okay, yeah, got it. Thank you so much. One last thing, and I'll come back in the queue. Just wanted to get your outlook for the fertilizer and the IPA business margins going forward. Should we expect those to remain under pressure for at least the foreseeable future? And then conversely in TAN, I know right now the market situation is very tight, but if we take a slightly more medium-term view, what kind of spread should we work with, a margin should we work with, and a normalized margin, I mean, and by when do you think it would return to that sort of normalcy? Thank you so much.
Well, the million-dollar question is when do we expect the raw material prices and what happened to, for that matter, even the gas prices in Europe, spot prices in Europe to normalize. I think these are some of the factors that would continue to keep everyone guessing in terms of what happens to raw material prices and therefore consequently to various finished good prices which are impacted by these raw materials like gas and ammonia. That said, I think fundamentally as far as the fertilizer is concerned, look, we had, as you know, barring the last quarter, before that almost 6 to 8 quarters, we were our actually numbers at EBIT level, segment level in fertilizers continued to show improvement. But in the last quarter, there are two impacts that happened. That is availability of raw material itself, and also then because there were sharp increases in the raw material prices, the ability to pass them on in the end product is also limited, and therefore that can only happen with certain lag. So to that extent, we believe that once this kind of aberrations are over in the raw material prices and the sharp, practically week-to-week increase in raw material prices, we are going to get back to our earlier trajectory in terms of our EBIT numbers. In fact, some of the initiatives that we've taken in last quarter, and we are further sort of working on those initiatives in this quarter, would, from medium to long term perspective, would improve our margins, because now last quarter we've launched Crop Tech, which is crop specific nutrient in the last quarter. We have further launching variants of those Crop Tech for different crops in the coming quarter, in this quarter as well as the quarters which in the next year. So to that extent, we are moving more and more in terms of value-added products, differentiated products, where in general the idea is also, as much as these products will provide additional sort of benefits to the farmers in terms of the yield and produce quality, we are hopeful that we would also be able to get better margins in these products. So the journey in terms of differentiation has continued, and the few steps that we've taken last quarter and this quarter would go in and further strengthen that strategic drive. But these raw material price aberrations that we saw last quarter, hopefully once those aberrations are over, we are back to our EBIT trajectory that we had shown in previous 6 to 8 quarters. And mind it that volumes wise, we this year again, in a way, 9 months, I think the numbers are by and large similar to last year. But we had the capacity which we could not utilize because of not having enough access to raw material or those disruptions. So the raw material or the capacity utilization aspect of margin, that journey will continue as we also parallelly move our product portfolio to more and more differentiated product portfolio.
Thank you, Amitabh.
Thank you. The next question is from the line of Parin Gala from Sage One Investments. Please go ahead.
Yes, sir. Good afternoon. So 2 questions. One is that one of the competitors have just announced a new TAN capacity of 220,000 a couple of days back. So just wanted to understand now in FY25 rather, with our capacities coming plus newer on, are we looking at a scenario of a bit of oversupply going forward?
See, one is if you look at overall demand supply situation in Indian context, given the kind of we are seeing the growth as far as overburden removal requirement in coal sector is concerned, or for that matter, the likely growth in cement, steel, and infrastructure, we believe that TAN demand will remain strong. Now, if you see, almost every 3 years or so, roughly about 2 to 2.5 lakh tons of additional TAN demand gets created. So basically, if you look at every 4 to 5 years, there is and one additional TAN world-class TAN capacity needs to be created in the country. So as such, I have no understanding of when the capacity that was announced by the competition that, as you were mentioning, what is the time frame for that. But as far as our capacity expansion is concerned, we are on track to bridge the demand, by which time, like I said, given the growth that we are seeing in each of these end user segments, there would be the gap that would start getting created again. So in foreseeable future, I don't see a situation where a country would completely stop importing TAN, and to that extent, I don't anticipate that there would be an excess supply kind of a situation. Even if it does, we have in the past, and we continue to export TAN to neighboring countries, and therefore, given we are a coastal plant as far as Gopalpur is concerned, the new capacity is concerned, our ability to export to the neighboring market for any temporary access that is there in the country continues to be strong, and particularly when we have established our product in the international market from the point of view of the marketing network, the logistics chain, and even the quality of that product. So it's very difficult in absence of what timeline the other players have for their capacity. I am not able to, beyond this, I am not able to give any commentary.
Sure. Sir, how much is the import right now of TAN in the country?
Typically, it varies from 200,000 tons to 250,000 tons. It can, depending on the demand supply or a particular. So year to year, it can be in that range.
Okay. So last question from my side. One of your end user industries, the explosives, one of India's largest guys had a call in the morning, and they guided a volume growth of 15% for FY23. I mean, that was very heartening to hear. So are you getting that kind of a sense for the year from your clients and the end user industries? And could these volumes that we are talking about could exceed actually the expectations?
So when we also track the end user segment, and like I was earlier mentioning, that we've seen in the last quarter the overburden removal requirement coming from CIL and its subsidiary has been quite encouraging. As of now, the effect of, and this is from the point of view of TAN, the effect of infrastructure growth or investments that the country is talking about, it has not yet started reflecting in the infrastructure segment of our end user segment. And that is one gap in a way which we believe in a matter of time that gap would get bridged, and therefore we would start seeing the effect of that coming into the overall demand. Cement, steel, again, would require, both these sectors would also require blasting solutions. So with other than in infrastructure today, we are right now seeing the effect of this demand coming from all other end segments. And once the infrastructure starts, showing that upturn, there is certainly a possibility of strong demand coming from end user segment. I mean, we are already we are seeing that, and we saw that even in this last quarter, and that trajectory could continue.
Wonderful, sir. Thank you so much. All the best for the next quarter.
Thank you. The next question is from the line of Agam Shah, individual investor. Please go ahead.
Congrats on good set of numbers. So my question just got answered. I just had a question on the competitor itself. So thanks and all the best.
Thank you. The next question is from the line of Kenil Mehta from Omkara Capital. Please go ahead.
Am I audible?
I'm sorry, sir. Can you please speak a little louder?
Am I audible?
Yes, please go ahead.
So my question is, was the TAN demand increasing due to the increase in production by Coal India due to shortage of coal inventory at power plants across the country, which would have led to a power shortage across the country?
I didn't get your question. Was that a statement or you were asking a question? I didn't really catch your question.
I was asking the question. Was it due to the decrease in inventory of coal at power plants, which led to increase in production for Coal India? So it could be a one-off event for us also in tank capacity utilization level.
See, one is fundamentally, if you have been and been sort of watching Government of India's self-reliance initiatives, even government is encouraging a higher coal production and reduce dependence on the imported coal in general. Now, that would mean that Coal India and its subsidiaries will continue to have higher targets as far as the coal production is concerned. The second aspect that is driving the demand of TAN within coal is also the overburden removal requirement. So even for the same per ton of coal production, the overburden removal requirement would continue to grow because you are now getting into deeper and deeper mines, and to that extent, even if the coal production grows with X%, the requirement for TAN and blasting solution is likely to grow with X plus percent in the segment because the overburden removal requirement is growing. So that is one aspect. The second aspect that I'm sure you must also be keeping track of is that even government is now looking at coal mining in the private sector, where private sector has been now allowed to mine coals for commercial purposes, meaning that beyond one's own captive purpose, it is now also being allowed for commercial purposes. So that is going to see increased requirement of blasting solutions from private sector in the mining segment. So as such, that is of course I'm only talking about the coal aspect of it, but the other segments which I also mentioned earlier, that it caters to all minerals, cement, as well as the infrastructure segment. So it is not just coal, but the non-coal is 40% plus in the TAN demand, and to that extent, TAN demand we continue to be quite bullish about the demand of TAN.
But do you think this 110% utilization level will be maintained in Q4 and upcoming few quarters? Because over last few years we have never maintained 100% more than one time.
So see, last 2 years have also been there's been so first of all, within the year, second quarter is a lean quarter, and to that extent, because the mining activities are subdued, we see Q3 and Q4 are the quarters when the TAN demand peaks. The second aspect is that in as far as FY19 and FY20 are concerned, or for that matter 20 and 21. In 20 we saw significant flooding in Coal India mines, and therefore the production, which normally starts by October, started only by mid-December or end December. So we saw some demand getting lost in the coal segment in FY20. In FY21 saw the effect of COVID, and therefore in the first quarter, particularly from infrastructure and cement segment, the activities were very, very low. So these 2 years had exceptional situations, but if you go back to year before that, that is FY19, We did almost, I don't recollect the number, but somewhere around 510 odd thousand or 506 odd thousand tons of production. So it is, if there are no force majeure or exceptional situations, more than 100% capacity utilization for TAN is pretty much would be the norm.
And also the major margin driver for this quarter will be TAN because of operating leverage.
In this quarter, you are saying?
Yes, in this quarter.
Yes, in this quarter, TAN has contributed significantly to overall margin.
Okay. I have no question. All the best for you.
Thank you. The next question is from the line of Manish from Hansraj Virendra Capital. Please go ahead. Mr. Manish, please go ahead with your question. Your line is unmuted.
Hello, good afternoon, sir. Congratulations on the good set of numbers. I would like to know more about the environment-friendly initiatives, if you are taking any, like a water treatment system in your plants or a waste management system.
Yeah, so one is the new capex that is coming up in Taloja, that is ammonia. We are going with zero liquid discharge. Therefore, practically, there would not be any liquid discharge that would be going out of the plant. Also, as far as our Taloja existing plant is concerned, while we do kind of link our discharge with the centralized effluent treatment plant, the outlet of our plant actually is well within the norms or below norms, and therefore the discharge that we send it to central effluent treatment plant goes to, in a way, dilute overall discharge that goes on the downstream of CETP. So in a way, as far as our current operations or even the future operations that is going to come as liquid discharge is pretty much something that we are perhaps we follow the norms which are better than the norms that are statutorily applicable to us. As far as the air emission norms are concerned, we have taken certain initiatives in terms of, though the regulation doesn't mandate, we are taking certain capex initiatives to reduce the NOx emission from our asset plant, and that process is on. We would start with one plant and then gradually move to the other plant. That's the second aspect. I think other than that, like I said, we are even over a period of time, our water requirement per ton of production of our Taloja manufacturing facility, our water requirement we have gradually improved, whether it is the leakages, whether it is zero liquid discharge or any of those measures. So, we are not just as a manufacturing facility, not just remaining within the statutory norms, but we are going beyond statutory norms. As you know, IFC is also one of our investors in our company, and IFC, as you might be aware, that they typically also look at the emission norms or the environment norms way beyond what is there as per the local regulation. In some sense, we are the fact that we've been there. IFC has sort of gone through the detailed due diligence on environmental issues. It only puts another stamp of approval that our norms or our sort of standards are almost sort of global standards from the point of view of emission norms.
Okay, thank you, sir. That's very helpful. Thank you, sir.
Thank you. The next question is from the line of Mayur from Profit Mart Securities. Please go ahead.
Thank you, sir. Thank you for the opportunity. Congratulations for the good digits. I just want to ask what are the short-term and the long-term goals for company, and are we planning anything for the next quarter and year which will help in business for more growth?
So I think Chairman did mention, and Mehta did mention a few aspects which he said are in effect those are the initiatives that we've been working on, and we would continue to work. And some of the numbers that you are seeing are part of or as a result of some of those initiatives. One aspect that we've been been discussing with investors and in our earning calls as well as otherwise is overall on one hand there is a backward integration through ammonia project. The second is the expansion of our TAN capacity. So these are two capexes that we are immediately working on and completing these projects within the time and cost that we have set for ourselves is one of the key objectives that we are currently working on. The second aspect that Chairman also mentioned is that we are gradually, going down the route of differentiating our products more and more from an end user segment perspective, as well as sort of moving from product to product plus solution. So that's the journey also that is on in each of these product segments. In fertilizer, for example, the launching of CropTech, in technical ammonium nitrate, where we are looking at providing blasting solutions to our consumers directly. And in case of IPA, for example, moving to more and more high margin end user segment. So this whole movement of or transition from commodity to specialty or from product to product plus solution is another strategic objective that we are working on. And the third one that Chairman also mentioned is that we are trying to bring in more and more technology into our operations, be it artificial intelligence or drone-based work that we are doing with our consumers in the mining segment, or for that matter, various new products that we are coming up with, which are very, very crop specific, with inclusion of micronutrients, catering to specific crops. So these are the other initiatives which where we are our interaction with our customers are becoming more and more digital. And then, of course, there are digital initiatives within the organization where we are doing some business process re-engineering to improve all our various functions, whether it is finance or the sales and marketing or smart factory. So these are various digital initiatives that we've taken internally also to improve our efficiency.
Okay, thank you, sir.
Thank you. The next question is from the line of Aditya Chheda from InCred Asset Management. Please go ahead.
Hello. Hello.
Please go ahead. Please go ahead.
Yeah. Two questions from my end. One, what has changed in the working capital where we have significantly improved on the working capital days? And second, I would like to understand the TAN business better as to what are the raw materials which are used, like in percentages, if you can ascribe, and what is basically the cycle of sourcing and subsequently selling the finished goods product. Two questions.
So one is fundamentally in each of our product segments. So across, first of all, given that a lot of our operations are integrated, the raw material sourcing is common, and to that extent, from a working capital standpoint, getting better credit from our suppliers is one initiative that we have worked on. The second is in the marketplace as far as finished goods are concerned. We are, more and more moving towards, I would say, reducing the credit. As much as in some of the raw material, there are challenges today in terms of supply side. We are also requesting our end consumers to reduce the overall credit cycle. So there, in terms of increasing our overall cash sales, increasing the sale that is based on LCs from our customers. These are some of the aspects where overall we are on one hand trying to improve our overall credit that we get from our suppliers. At the same time, improve the overall working capital cycle in each of these products that we supply to the market. What is the second question related to raw material?
On the TAN, basically, I just wanted a breakdown of the raw material in percentages. And basically, if for example, how is the sourcing strategy, and subsequently, for example, when we source and whatever price we have, how do we pass it on? Basically, the timeline of sourcing to finished goods, and the percentages of basically bifurcation of raw materials used for TAN.
So one is typically in TAN today, our conversion cycle, cash conversion cycle would be somewhere in the region of 15 days. So overall, while again, like I said, the raw material sourcing is common. The ammonia that we consume or source, it gets utilized for nitric acid, for TAN, and for fertilizer. To that extent, there is common sourcing of raw material, and to that extent, any credit terms that we get, in a way, apply to all the sectors. But in all of these sectors, the cash conversion cycle or the credit period extended to our customer is depending on whether it's a B2C kind of market or B2B market.
Okay, thanks.
Thank you. The next question is from the line of Resham Jain from DSP Investment Managers. Please go ahead.
Yeah, hi. Good evening, and congratulations on good set of numbers. So I've just one question on the raw material which is used for TAN. Actually, you use both ammonia as well as RLNG. And the competition who is planning to put up a plant might be using the pool gas. So if you can explain in terms of competitiveness, how are you in terms of like material, how are you placed versus the new player?
So I have, like I said, I do not have the visibility on the project that has been announced by the other player. And to that extent, it's not fair for me to comment on what is the basis of what are the raw material and sourcing. What I can comment on is that as far as we are concerned, we produce part of our ammonia ourselves. We have about 130,000 tons of capacity in-house. Once our ammonia project comes up, we would have the capacity of 500,000 tons per annum. And to that extent, our Taloja facilities or our requirement of ammonia in Taloja and Dahej would be completely produced in-house. Today, other than our own production through the in-house ammonia plant, we also import ammonia. And to that extent, our ammonia as a raw material is a combination of our own production and import. And our own production is based on our LNG that we buy from gas aggregators. In TAN, and therefore, the whatever ammonia that goes at the point in time is a weighted average or a function of both domestic or our in-house production cost and imported landed cost of ammonia. Now, like I said, I have absolutely no idea what is the basis or the raw material sourcing strategy that the competition would have for the capacity that they have announced.
So just one question. For this quarter, what is your gas cost for manufacturing this 130,000 ammonia? The gas cost for this third Q, 3Q.
So Paras, would you have the number broadly? So you see, what happens is, I mean, just to answer your question, I can come to that specific. But we have our gas contracts are a combination of spot gas as well as some long-term contracts, and these long-term contracts could be linked with Brent prices as well as Henry Hub, that is the US gas price benchmark. So as such, it could be a combination of these three, and these all three prices can move slightly different from each other. But if I look at let's say December quarter, the prices of gas is roughly about 34 rupees per standard cubic meter.
Sorry, 34 rupees or US dollars?
Standard cubic meter.
34 US dollars, right?
No. Rupees per standard cubic meter. US dollar would be, one will have to translate that into.
Yeah. Got it. Sir. No problem. Yeah. Okay. Perfect, sir. Thank you.
Thank you. The next question is from the line of Sharan, an individual investor. Please go ahead.
Hello. Yeah, thank you for the opportunity. So I'd like to know what's the current capacity utilization of TAN, and till the new capex, which is inaugurally, that gets completed, is Deepak in a good shape to accommodate the growth in that sector?
So the capacity utilization in TAN in this year, 9 months, has been overall, I think 100%. And Q3 it was 110 odd %. If you see proportionate, if you divide the capacity proportionately for the quarter, but on a full year basis, 100% capacity utilization. So we do have some capacity or headroom sitting in the existing capacity itself. We have also indicated in our earlier discussions that we are currently also working on debottlenecking of our TAN plant, and that should free up additional capacity. So till the Gopalpur capacity comes up, we would see certain freeing up of capacity or debottlenecking of capacity from our Taloja plant.
Sure, that's great. And in the last Concall or in the media, I think Mr. Shailesh mentioned that you have a non-core asset in the Pune of worth of, if I'm not wrong, 700 crore, and there is a plan to liquidate that. So is that plan still on, and any progress on that?
No, I think I have answered this question earlier. As of now, since the last discussions, there is no further progress. But that is pretty much something that, as a non-core, it's an asset that we at the right time would like to bring that capital back into the core business.
Yes, sure. And one last question on the agriculture sector. It looks like the Deepak Fertilizer is pretty much very famous in the Maharashtra region and other, I'm not sure exactly in other states. What are the plans to extend your products where your products is not so much familiar? So are there any efforts going on in that direction?
So see, Maharashtra is definitely our core state, but our core command area, the way we define ourselves, is Maharashtra, Karnataka, Gujarat. So we have strong presence in these three states. We are also now present in other states like Andhra, Telangana, MP, and even in the northern states. The thing is, in fertilizer, as you know, the overall transport economics play a significant role as far as your net margins are concerned. So to that extent, if you are able to sell your volume closer to your production facility, you have better transportation economics. And therefore, as we increase our capacity utilization, since we already have now presence in states other than these three states of Maharashtra, Karnataka, Gujarat, into AP, Telangana, MP, and other states, we would obviously more and more product will find its route to these states as well.
Sure. Yeah. Thank you very much, sir. All the best.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to Mr. Pratik, please go ahead.
Yeah, thanks. On behalf of Systematics, I would like to thank the management for this call and also to all the investors who had logged in. I would like to hand it over back to Mr. Bhargava for his closing comments.
Well, thank you everyone for your participation. For any further queries or clarifications, we are available. Please do get in touch with our investor relationship team. Wish all a safe and healthy times going ahead. Thank you so much for your participation. Thank you.
Thank you.
Thank you so much, sir.
On behalf of Systematics Institutional Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.